Good morning, I'm Clinton Griffiths. As harvest picks up pace, USDA is making cuts to its yield predictions. The latest supply-demand numbers a little lower than the trade was predicting. Let's get straight to the latest numbers. It's now calling for corn yields of 173 bushels to the acre, cutting production down by 70 million bushels from last month. As for soybeans, now at 49.6 bushels to the acre, down half a bushel from the September forecast, cutting production by 42 million bushels. We'll check ending stocks now. Corn lowered 110 million bushels to 2.1 billion bushels. USDA also making a 25 million bushel cut to exports. Meanwhile, soybean exports are also reduced, but ending stocks are unchanged from last month at 220 million bushels. For wheat, ending stocks are up 55 million bushels to 670 million. Ag Day's Michelle Rook joins us with a deeper dive into these numbers. And Michelle, those new yield predictions sent corn and soybeans soaring.
Yeah, that was part of it, but USDA also cut U.S. ending stocks on corn more than expected and left soybean carryout unchanged when the trade was expecting an increase. But market analysts say the big shock in soybeans came from the cut in global stocks. The soybean market scored a victory as USDA lowered yield and production, and even with a drop in exports, they left ending stocks unchanged. The trade was expecting an increase after the higher quarterly stocks on September 30th. The trade is also anticipating lower yield moving forward. However, the bigger bullish surprise was global ending stocks were cut 3.6 million metric tons.
Yield was lower than trade is anticipating. The ending stocks are lower than anticipating. And you're right, though. The world number, I think, is the biggest surprise. To see that big of a drop, a revision, a world number, I think definitely got to trade's attention coming into the report. Coming into this report, Michelle, there was talk that the funds are actually short beans. This report may be enough to scare them right back into a little bit of a net long position.
On corn, USDA again lowered yield and production, but also cut exports. However, they lowered ending stocks 110 million bushels due to the lower carry-in from the quarterly stocks. And just like on beans, the trade is expecting further yield cuts. That's positive, but McCormick says a carryover above $2 billion is still a headwind.
Beans, when they get a little bit smaller in October, the history does work in the favor that the crop will get a little bit smaller down the line in November, then again in January. But unfortunately, unless we see an uptick in exports, there's a very good likelihood that they will offset maybe some of that production losses anticipated down the line with demand cuts. So the balance sheet overall, Michelle, I'd say is going to stay relatively cumbersome around this 2.1, 2.15 carryout number.
The WASDE was bearish for wheat with the 55 million bushel increase in U.S. ending stocks, and USDA only lowered global stocks 500,000 metric tons. I'm Michelle Rook reporting for Ag Day.